Some people get scared when the stock market goes down, but as long-term investors, we should see market declines as an opportunity to buy quality companies at attractive prices. In this video, we'll discuss 3 dividend stocks that I'm buying this past month, and I'll also include a bonus fourth stock at the end of the video that I think is at an attractive valuation as well. First up on the list is one of the very few technology companies that the legendary investor Warren Buffett owns, and that company is HP Inc., ticker symbol HPQ. What I like about HP is that although they are a very well-established company with a strong position in the PC and printer market, they still have lots of room for growth through further expansion of market share and also through new technologies like artificial intelligence and 3D printing. HP also has some very strong dividend metrics. Their yield currently is almost at 4% because of the decline in the stock price over the past few months, and their payout ratio is quite low at just over 30%, and they have an average dividend growth rate over the past 5 years of 13.5%. Their last 2 dividend raises have been a little bit lower at only 5%, but I think they'll be able to do better than that in the coming years as their business continues to recover from some weak demand in 2022 and 2023. HP is a relatively new position in my dividend portfolio. I first bought it at the end of August of this year, but it has quickly risen to become the largest position in my dividend portfolio at just over 10% of that portfolio. When I did calculate a fair value for HP with a discounted cash flow model in June of this year, I got a fair value of about $31.50 and a buy price of about $28 when I applied a 10% margin of safety. Currently, the stock is trading right around that $28 mark, which is pretty much in line with that buy price, like I said. And since the beginning of September, the stock price has been below that buy price much of the time, with the low being near $25 per share. So I've been buying a fair bit of HP stock throughout that time period, and my average cost right now is $27.53, which I'm pretty happy with. And most recently, at the end of October, I bought some more HP stock at a cost of $25.98 per share. And then one final thing as well that I do like about HP stock and the company as a whole is that they have a fantastic record of repurchasing stock and increasing the ownership value of current shareholders. The next company that I've been buying over the past month is a lesser talked about company in the materials sector, and that is Air Products and Chemicals, ticker symbol APD. Like the name suggests, they are a supplier of various gases and chemicals to a wide variety of industries in a large number of countries throughout the world. I really don't have all that much more to say about APD, except that they have a pretty healthy balance sheet and have a steady history of increasing both revenue and earnings per share over time. In terms of dividends, their yield right now is about 2.5% with a healthy payout ratio of 60%, and their dividend growth over the past 5 years has been about 10% on average, which is pretty strong, and I like to see that. And they are getting close to becoming a dividend king with 48 consecutive years of dividend increases. They should be announcing as well their next dividend raise in about 2 months at the end of January, which I'll be excited to see. APD is one of the real OGs of my dividend portfolio. I've owned it for over 3 years now, and I've been pretty consistently buying the stock whenever it's below about $270 per share. Though I would say that threshold is a little bit tighter than that for me nowadays. I did buy a fair bit of stock as well between $220 and $240 per share towards the first part of 2022, with my lowest purchase there being at $218 per share. But more recently, I bought some stock in the first week of November after the stock dropped about 12% in one day on their earnings announcement. So my most recent purchase there was at $255 per share. But the stock has climbed up since then, and now it's above 270, so I haven't really bought any more since the beginning of November. And currently my average cost on that position is $257 per share, and the stock is about 4.6% of my dividend portfolio. The third stock that I've been buying this month is Texas Instruments, ticker symbol TXN. Texas Instruments is another technology company. Primarily, they design and manufacture a wide variety of analog and embedded processing semiconductor devices and components. Texas Instruments is a little bit of a cyclical company, and we can see that in a chart of their revenue over time here. Right now, they're kind of in the beginning of the down part of the cycle. So results right now don't look super stellar, but things should turn around in a year or two or maybe 3. And I have confidence that that will happen yet again. Another good thing to see about the business is even though the revenue and overall business is pretty cyclical. Their earnings per share have been a lot less cyclical, as we can see, and have been more steadily and consistently increasing over time. And in terms of their dividend, their yield right now is at about 3.3% with a payout ratio of 64%. They have been growing the dividend at an average rate of almost 14% over the past 5 years, which is really exciting to see. But that has slowed down a little bit recently, and will likely be a little bit slower for the next year or two. So, for example, their most recent dividend hike in September was only about 5%. Like HP, Texas Instruments is a bit of a newer position for me. I first bought the stock in May of this year at $160 per share, and then I didn't buy any more until the end of September when the stock got back down to 160. Since then, I have been buying fairly consistently throughout the 150s and 140s, with my lowest purchase being at $141 per share. Right now, the company Texas Instruments is just under 8% of my dividend portfolio, so it is one of my largest positions, and my average cost is $154.55. The bonus company on the list is Leggett & Platt, ticker symbol LEG. Leggett & Platt is a company that I do own in my dividend portfolio, but I haven't been buying it at all recently. So the reason that I did want to include it in the video is that I do think it's at a pretty attractive price right now. So the stock is down by about 1/3 in the past year, and I think the price of around $22 per share is well below its fair value. And I would estimate the fair value to be in the range of 35 to 40 or maybe even $45 per share. And for me, the reason that I haven't been buying more, despite the discount to fair value, is just that their dividend growth is pretty low. And I'm generally looking for companies with a little bit higher rate of dividend growth. And because of the large decline in the stock price, the yield right now is close to a whopping 8%. Seeking Alpha does say here that the payout ratio is above 100%, but from all the estimates I've seen, I think Leggett & Platt is going to earn enough in 2023 to cover all their dividends that they do pay. The business has been struggling for sure recently, and the future does look a little bit uncertain, but I think they'll be able to recover in 2024 and 2025, and continue growing, which will definitely help the payout ratio be a lot healthier and let them grow the dividend a little bit more in the future, I think. Management has been prudent recently, I think, though, in keeping those recent dividend raises at a minimum, with their average dividend growth rate being only 4% over the last 5 years. So, like I said, I haven't actually been buying Leggett & Platt recently, but I do think the price is very attractive right now, so it's something I'm definitely considering over the next few months. And my portfolio has grown a lot since buying my substantial stake in Leggett & Platt. So right now, the company is only 2.3% of my dividend portfolio, so I could certainly buy some more and have it still be a smaller position in the portfolio. So those are 3 dividend stocks that I've been buying in the past month, plus that one bonus stock that has a bit of an uncertain future, but does look quite attractive valuation wise. I would love to hear what you think of these companies and what companies you've been buying recently, as I'm always looking for new perspectives. If you are interested in chatting with myself and other long-term investors on a regular basis, click the link in the description and join my free Discord server. It's pretty fun, and certainly a good place to exchange ideas and learn more about investing. Thanks for watching to the end of the video. I really do appreciate it, and I'll see you all in the next one.